Famous stock analyst Jim Cramer believes the big tech stocks are flashing a buy signal right now. And in this video, we're going to take a look at the 5 FAANG stocks, take a look at their current share price, what's expected of them moving forward, and how we believe they're going to perform past the most recent dip in the market. Jim Cramer, one of the most famous stock market analysts there is, discussed on his TV show Mad Money today how the big tech stocks are flashing a buy signal, and we're going to take a look at all of their charts and their expected earnings over the next week. We're also going to take a look at Jim Cramer and why he believes the charts are going to go up, and his analysis that he shared on the TV show with everyone. In my personal opinion, I am a big fan of Jim Cramer. I really like his perspective on the market and how he shares his opinions on different companies. I'm personally a fan of his, and I really like to take into consideration his opinion on current market conditions and what he expects moving forward. And on his show today, he discussed the FAANG stocks and how they're entering into oversold territory and may see a nice buy signal right now. He took the chart interpreted by Katie Stockton of the FAANG stocks and how they are entering into oversold territory and may be ready for another bounce. He also discussed how as the pandemic continues to grow, the FAANG stocks have proven that they can weather the storm and actually grow during this tough time for the economy. So he also made a quick mention saying that as the pandemic grows, these may be the companies you want to jump in and buy. He discussed that looking at this chart where they're entering into that oversold territory, that has only happened 4 times throughout 2020, and that the indicator is showing a buy signal, and once this oversold territory comes up, the share price is most likely ready to rebound. He also talked about how the FAANG stocks have come down too hard and too fast, and may be due for a continuous bounce back up. So Jim Cramer, I believe, is a very good financial analyst. He shares his pros and cons of every company, and of course, there is a disclaimer at the end of this article that he does own these companies in his charitable trust, but overall, these FAANG stocks are the largest companies in the market, and they're held within a lot of strong investors' portfolio, so I don't believe he's being anywhere biased because of this recommendation, but I do like his opinion on this, and what we're going to do in this video is go over each of the companies ourselves and discuss how we think they're going to perform moving forward. So as you know, everyone, I personally am the Gen Z investor, and every single day we talk about the stock market, go over different stocks you can buy and sell within your portfolio. And in this video, we're going to focus on the FAANG stocks and determine if we like them as a buy now, taking into consideration their current price chart, the fact that they're entering into some oversold territory. We may see a bounce back, especially because 4 of the 5 FAANG stocks are reporting their latest earnings later this week. So please hit that like button and subscribe. 4 of the 5 FAANG stocks, excluding Netflix, report their latest quarterly result at market close on October 29th. If we take a look at the NASDAQ earnings calendar, you can see that Apple, Amazon, Google, and Facebook all report after market close on the 29th of October. So these are companies with very anticipated earnings reports. Once these reports come out, the entire market will be impacted, whether we see nice positive or negative reports. And it'll be very interesting to see how these companies performed through the tough time of the pandemic. The pandemic hurt a lot of businesses across the world, but these FAANG stocks have been known to suffer through this storm and actually perform very nicely. And it'll be very interesting to see if these positive or negative reports will kind of kickstart a rebound or continue on the market decline that we've seen over the past few days. Now we're going to take a look at each individual FAANG stock, their current share price performance, how they're trading relative to their most recent high, and what they're expected to report over their next earnings report that we're going to see on October 29th after market close. So of course, we're going to go in order and start with Facebook. Shares of Facebook are down over 6.7% from their most recent high, and the shares of the company overall are up 47% over the past 12 months. So although we've seen a lot of nice gains from Facebook over the past year, as of late, we have seen a pullback of close to 7% from the most recent high. So the company currently trades at around a $789 billion market cap, and on their next earnings report, that is of course at market close on October 29th, we're expecting earnings per share of $1.91 and revenue of $19.78 billion. So Facebook's going to be an interesting company. Overall, analysts were worried about a tough quarter because of the reduction in ad spend on their platform. But after last week's earnings report from Snapchat, who saw a record quarter and a very large increase in actual ad spend for the quarter, people are changing their mind and are expecting a good report from Facebook. If Snapchat saw some nice positive results, they're expecting Facebook to do the same. So over the past few quarters, Facebook's beat analyst expectations 3 times, with one single miss where they missed by only 1 penny. And in this next quarter, their earnings per share is expected to decline year over year by over 10%. So this is going to be a very highly anticipated report because this really shows how the small, medium, and even large cap companies are using their ad spend. Facebook has one of the most powerful ad spend platforms in the world. Their advertising reaches billions of people across the globe. And overall, this is a company where ad spend really helps determine their total top line report. And we will have to see what's going to happen at the end of market close on the 29th of October. The second FAANG stock, Apple, has seen another pullback as well away from their 52-week high of over 13%. The most valuable company by market cap on the stock market is down 13%. This is entering correction territory. So by definition, a stock market correction occurs when an individual stock or an index like the S&P is down over 10% from their highs. And you can see here Apple is down over 13% from their most recent high about a month ago. So they are in that correction territory, currently trading at $116 a share. If we take a look, they are still up over 86% on the 12-month chart and are trading with a 1.97 trillion market cap. On the 52-week range, a nice pullback away from the 52-week high, so another attractive price point maybe during this range, and like the indicator represents, Apple might have fallen too hard too fast. Another company, of course, reporting earnings, expected to announce 70 cents earnings per share with revenue of $63.33 billion. Over the past few reports, they've done a beautiful job of beating analyst expectations each and every time. They do pay a dividend. They are the only FAANG stock that is paying out a dividend right now. If you do the FAANG plus Microsoft, then Microsoft, of course, pays out a dividend, and they actually reported a very solid quarter. Their cloud-based Azure platform saw over 47% growth year over year. So a great report from Microsoft. They actually beat on both revenue and earnings. But we're going to focus on the FAANG stocks excluding Microsoft, and Apple currently yields 0.71%. They pay out only 25% of their net income as a dividend and have a 5-year dividend growth rate of over 10% averaged over the past 5 years. So far, the first 2 FAANG stocks, Facebook and Apple, are expected to perform very nicely over the next quarter, but are still expected to post a little bit of a decline compared to last year's estimates. Amazon is the next FAANG stock we have to take a look at, and this is another company on a significant dip down around 7% from the most recent high. So Amazon, of course, the largest e-commerce platform in the world, is expected to post nice results because of the stay-at-home economy we're going through, the shift towards digital purchases. This is in a kind of economy where Amazon is expected to flourish. They're up over 82% this year and are trading at a $1.61 trillion market cap. On their earnings report, we're expecting $7.36 earnings per share with revenue of over $92.5 billion. And analysts over the past 90 days have made 28 upward revisions for earnings per share estimates and only one single downward revision. This just shows as time went on since the previous quarter, analysts have only raised their expectations for Amazon's results because of how the economy is going. Over the past 4 quarters, they have 2 misses and 2 beats compared to analyst expectations. And this quarter, they're expecting a 73% year-over-year increase in earnings per share. And over the next quarter as well, they're expecting a 40% increase, and into 2021, close to a 74% year-over-year increase in earnings per share. So analysts moving forward have high expectations for Amazon, especially if the pandemic continues and we continue to stay in the stay-at-home economy. This may be a stock that will continue to flourish and post very strong results. The next FAANG stock is Netflix. This company has already reported their latest earnings, and this is not one of the companies, and is the only FAANG stock not reporting on the 29th. They've seen a big dip as of late, and from their most recent high earlier this month, they are down over 11.7%. So once again, this is a company within that correction territory with a decline of over 10% right now. Netflix still up over 76% this year with a $215 billion market cap. but a significant pullback away from their 52-week high, which peaked at $575 a share. Their latest earnings report showed that they missed on earnings per share by 40 cents, but actually beat on revenue by 55 million, and they reported earlier in the month of October. The final FAANG stock we're going to take a look at is, of course, Google, one of the largest tech giants in the world. They are down over 6.9% from their most recent high earlier this month. This is a company where they are a dominant player in the tech space and will continue to be there for a long period of time. They haven't seen as much as a run-up compared to the other FAANG stocks over the past 12 months, and shares are only trading up around 25%. They have a market cap of just over 1.08 trillion, and of course have a 52-week high at $1,726 per share. If we take a look, they're expected to perform $11.17 earnings per share with revenue of over $42.8 billion. And over the past few quarters, very interesting numbers from Google. 2 misses and 2 beats on earnings per share numbers, and this year we're only expecting a slight year-over-year increase compared to Q3 2019. So the FAANG stocks have seen a little bit of a decline as of late. They are all down over 6%. We saw 2 of the 5 FAANG stocks in that correction territory down over 10. And these are companies that, according to Jim Cramer and this chart, are entering into oversold territory and may be ready for a nice bounce back. So Jim Cramer, one of my favorite analysts to take into consideration when evaluating companies. I think he's very entertaining, really like his perspective on the market, and I do personally take his perspective into account when analyzing stocks. So I thought it was a great idea to make this video going over his perspective of the market and also take into account my personal perspective as well. So please hit that like button and subscribe, and I will see you in tomorrow's video.